Welcome back to Wealth Mavericks, the podcast where we help doctors unlock the secrets to building generational wealth. And today, we're talking about getting to a net zero tax liability.
Maybe he doesn't want the American people, all of you watching tonight, to know that he's paid nothing in federal taxes, because the only years that anybody's ever seen showed he didn't pay any federal income tax. So
that makes
if
me
he's
smart.
paid.
When you are a member with Terra Firma, we have two goals for you. The first is to get you as close as possible to a net zero tax liability. And the second is to get your assets to the point where they outperform your ability to earn. Today, we're going to talk about one of our favorite topics, lowering taxes, and specifically getting to a net zero tax liability. When we talk every week to doctors, prospective members, something we tell all of them is when you are a member with Terra Firma, we have two goals for you. The first is to get you as close as possible to a net zero tax liability. And the second is to get your assets to the point where they outperform your ability to earn. And when people hear that, the most common response is, no way. That's not legal. How can you do that? I mean, there's skepticism, there's doubt. And so I wanted to dedicate an episode to it because when I first heard it, I thought, what? Pay no taxes? Like how are we doing that? So Bob, I would love to hear from you. Can we do that for members? And how do we do it?
Yeah, no, it's a great question. And I think a lot of it has to do with the perception of a dollar, a perception of how we earn the dollar, and the perception of how the government sees that dollar. And a tax return is for an individual tax filer to summarize all their incomes to come up with a taxable income amount to be taxed on. That's what dictates your tax bracket and the taxes you pay. So the government also knows that those numbers change every year. They're not the same. There is no flat tax. It is a progressive tax system, meaning the more you make as taxable income, the more taxes you pay. So here's where the answer to that question is how's that possible? Is we're not looking at it as an individual tax filer. We're looking at it as a business owner. Taxes are an expense line as a business, just like all other costs to a business. You have revenue, you have expenses, and at the end of that, you have your profit or loss. So that profit or loss, most of our doctors have pass-through entities, meaning that the money that they earn as profit or loss in their business passes through to them. As a W-2 income earner, that's their income. That's passed to them, and therefore they have a tax liability that is part of taxable income that they pay taxes on. Okay. But as a business owner, your business is structured in a way to where you're supposed to take your revenue and use that revenue to grow more revenue. The purpose of a business is to make money. The purpose of the business is not to pay taxes. It's to make money, because the government knows that if you're not educated well enough, if you're not willing to spend money on the right team to lower your tax liability, the IRS, will be happily sitting there with their hands open to pay for you to pay that tax to them. Okay. So when we say net zero tax liability, what we're referring to is getting your dollar, getting your assets that create that income or that cash flow to yield less taxes. So what kind of assets are we having our members put into their plan? And that is what the IRS tells us what to do based on the tax benefits they give those plans. So that's kind of a high level summarization. Let me stop there first, see if there's any questions or clarifying aspects that we should clarify on that before we take the next step.
Well, we say business owner a lot, or their business, and yet you just talked about W-2, and a lot of the doctors who come to us are W-2 earners. And we've done episodes about this before, but a very common misconception that we hear is like, well, I'm a W-2 earner. There's nothing I can do to save on taxes. And so we have to tell them, actually, there is. So I think speaking to that too, because people are listening and they're like, I'm not a business owner.
Yeah, no, that's great. So that's true. And we say this in our first conversation, is that don't let us saying being a business owner scare you. We're not telling you to stop being a W-2 employee as a doctor and go start your own practice. Every business out there has a different purpose. What we need to do is develop a business for you that has a purpose, not a side hustle that you're selling on Etsy, right? We're not telling you to go moonlight and do another 40 hours moonlighting, right? What we're saying is that we're going to utilize a business structure. We're going to show you how to fund it, to utilize those monies into investing in other areas. Notice I said investing, where you're putting your dollars into other businesses, and we treat you as an accredited investor. And I believe we've done a couple episodes on what an accredited investor is on this channel, as well as our other channel, Asset Coach and Tax Strategist. The reason this is so important is because as an accredited investor, these alternative assets are businesses. So when you put money in those, you're funding other businesses to thrive, which have taxpayers. So you're investing in these businesses to allow them to make more money, to profit, to, as they grow, they have to hire what? More taxpayers. You're increasing that tax revenue for the government. You don't personally have to do it. You can actually use your dollars that you earn to encourage other businesses in your community and surrounding to encourage that. That's what all the wealthy do. So when you hear Warren Buffett say, yeah, my secretary is in a higher tax rate than I am. Well, because she's a W-2 and he's a business owner. Well, he's the 5th wealthiest person in the world. Yeah, but that's not all income that's coming to him as taxable income. That's his net worth. That's his wealth value based on what he did, what I just explained. He took money and put it into these other businesses. That's not income. That's an asset value. We don't pay taxes on that. We do at death and estate planning. That's different strategies. That's different IRS codes that come to us. Okay. But here on a day-to-day basis, he pays like a 15% tax rate. Why? Because that's his lifestyle. The guy still lives in the same house for the last 60 years. He bought for $34,000 as a 3-bedroom, 2-bath house, I think. Right? Tell me how many billionaires have done that, right? I mean, Bezos has a different yacht for every week, I think, right? I'm just kidding. No, right? He has this beautiful yacht. He spent hundreds of millions of dollars on a yacht. Good for you. Buffett's not like that. So every one of them is different in how they treat their value, how they take that value out of the business and turn it into income that the IRS ends up taxing. And there's different rules that the IRS provides. So one of the things we say as an answer, well, how do you get there? The more you have, the more you're able to access of the tax code. Most people who don't believe that they can save money on taxes are only accessing a small portion of their tax code that's available to them. It's kind of like our brain, right? How much of our brain do people say we use?
10%.
Like 10%, right? And we know some people they're not even half that, right? Great people, but yeah, okay, right? So we're talking to people, and I'm one of those, by the way. I'm not a genius, right? I don't have this a score of genius that says this guy, he's a 160. I don't even know what the word is.
IQ.
IQ. See, it's not even a word. But that's the point. That's the point, though, right? Is that we're not accessing all of the tax code, just like our brains. We're not accessing all of it because we're not in a position to. As I educate myself, as I get better, I can increase my IQ. Well, guess what? We can do the same with our assets. We can do the same with our wealth. We can increase our ability to use more of the tax code, which actually allows us to have a lower tax liability. It's hard work, though. They don't believe it's possible because nobody's working hard for them. And they don't know that all of that exists. Right? And there's a lot that goes into it just in that simple answer.
So I think very practically speaking here, because I'm listening as a listener would, what we explain to people is that you're earning a good income. You are an accredited investor. You are paying for the lifestyle you want to live. You are maxing out your 401k, IRA, retirement. You still have more money on top of that, usually, most of the people we talk to. And a lot of these people don't know what to do with that extra income. And they're out there on the internet looking for ways, talking to people like, where do I put this? A lot of times we will, they'll come into Discovery, we'll look at what they have, and there's a lot of money just sitting, not doing much because, again, they don't know what to do with it. So that is where the opportunity is. You say the wealthy get wealthier. You have this wealth, you have to do something with it. And when you do, you unlock tax savings that flows to your personal tax return, lowers your taxable income, and gets you close, if not to, that net zero tax liability.
Yeah.
You need to know how to do it.
Yeah.
Right?
Yeah.
Okay.
And here's the interesting thing about it is our doctors work their tail off for their income. Now, some will say that they're overpaid. Well, we all make decisions in our life that create what we earn as an income. And I will say, you as a physician, giving up a decade of your life to educate yourself, to serve your community in whatever specialty you are, deserve that reward. You've earned it. There is no other specialty. There is no other industry. There is no other job that gives up a decade of their life to learn to serve. None. And so, but at the end of the day, it is life and death in some of your specialties. So risk reward, you should be compensated in a way. Now, that being said, to Aaron's point, what do I do? Where do I put my money? That is another skill of education that you never were taught. And so you know that I should not have my money sitting in cash, right? Grant Cardone has this great saying. He says, we should never save cash. We should not have savings. We should have storage. We should store our cash in preparation to get that cash put into working production. And what that means is that because you work hard for these dollars, why can't your dollar work hard for you? It can. Where? That is also the point of tax planning and strategic tax planning and getting to that next tax liability, net zero tax liability, getting to understand what it means to be an accredited investor and those other opportunities that are out there that are actually most of the time safer than traditional investing, like the rest of the society is told to put money into, right? Now, there are no guarantees, but at the end of the day, shouldn't you reduce your inflation risk? One of the things we do as in this process is something called an asset map, and we break down the value of your money, not your balance, but the value. We take into consideration the rate of return. We take into consideration the taxation of that asset in one of the three stages of that asset: the accumulation, the contribution, and the distribution, and inflation. That eats away at the value. If you're sitting on cash, you're earning a negative return. You've worked hard for it. Why should you be losing money because you don't know what to do with it? Which also leads to a lot of doctors making choices and decisions because they don't know how to review projects. They don't know how to review investments. They don't know how to look at the nitty-gritty of certain things. And they like a 15%, but they don't know what goes behind that 15% return. Mm-hmm. And so they put their money in, and then where one doctor that Joe and I spent some time with, she calls them dumb doctor deals. Right? Now, I don't necessarily know if they're dumb doctor deals. They are uneducated implementation deals, meaning you did not get educated to understand if that's a good deal or not because you have no background in that. Right? So understanding all of those aspects leads to a net zero tax liability. It's taking steps with your money purposely to create an outcome that's purposeful. And some years you'll pay taxes because that's what equated to taxes, right? You had taxable income. And there's some years you won't. Awesome. But to just sit there and go, I don't think this is possible, and I'm just going to keep doing everything I'm doing because I don't understand what you're saying, so therefore it must not be real, then you deserve the right to pay the taxes you're paying and not get any thank you cards from the IRS.
Well, and I think that's, the bottom line is decisions have consequences.
Yeah.
That's just a general truth. If you choose not to wake up in the morning at the time you're supposed to, you're going to be late for your surgery, and there's going to be consequences. If you chose not to go to medical school and not to become a doctor, that has different consequences. The consequence of choosing to become a doctor and having that delay. I watched this great video the other day. There was 2 kids, like young kids, in a hallway, and they stacked up red Solo cups all the way along the hallway, like every foot for like 30 feet. It was a lot. And one of the kids started out, and they could only grab one at a time, and they had to get it and bring it back and put it in the trash. And so the first kid, he's boom, 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 boom. He's just getting them. He's getting all these cups stacked up. The other kid,
the ones that were closer to him, right?
Yeah, close to him. The other kid chose to go get the far cups, and it's taking like 10 seconds to go get each one. But as it's getting closer, he's accelerated, and he ultimately ends up winning the race. I don't know why the psychology of what that was, but decisions have consequences. You as a doctor chose to go get those long cups first, right? You invested that decade of your life, and it sometimes might even still feel like you're behind. But I'm telling you, if you make different decisions, you'll have different outcomes. And one of those decisions is to make the intentional choice. How you receive your income really matters. So if you want to continue to pay the government at the level that you are, Aaron, you've been on with me when I'll ask, it could seem like a little bit of a abrasive question to someone, but when they're pushing back a lot, I'll just say, time out. Like, how's that working for you? Like, you're doing stuff right now. How's that working for you? You're paying $300, $400, $500, $1 million a year in taxes. Are you okay with that? If you are, we wish you the best. Like, that's okay. You don't need us to continue to do that. But if you do want to shift into a different gear, make a different decision, have a different outcome, we're here for you.
Yeah. Yeah. And I think the last point is when we work with, and what separates us when we work with our members is that we're looking at that tax savings and redistributing that tax savings, that refund, so to speak, back into the economy, back into the wealth of that doctor. So we're reinvesting those monies into other projects that create a wealth value for them, but also creates other tax savings, but it creates other taxpayers, right? So it's different. It's not saying we're just going to get this refund and just store it up in a vault and call it a day. That's why it's legitimate, because the IRS wants you to do that. That's why they give this to you, is because they know and want you to put it back into. That's why they encourage certain tax benefits and certain assets at certain times, because they know that that is a carrot for us to put money into it and get a reward from that. It's pretty basic. It really is. But there's a lot to that basics, right? There's a lot to justify that. And that's the key. How do we justify what we're doing so we can communicate to our business partner, the IRS, of what we're doing, right? Based on what they've told us what we can do. Check the box. I did it. I did it. Great. Thank you. See you next year. Right? So.
Thank you, Bob.
I love this stuff. You're welcome. I love this stuff. This was a fantastic topic.
Good. I got a lot out of it. And Doc, I hope you did too. If you are paying 6 figures plus every year in taxes, and you have this extra income that could be going toward growing your future, a net zero tax liability might seem too good to be true, but we are here to tell you it's not. And our process is built to take you one step at a time to show you how we can accomplish that for you. So we'd love to talk to you. Thank you for listening. And until next time, go be a wealth maverick.